Hi, welcome to Market Conversations. Just want to do a quick video on Alibaba. It is down currently pre-market. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. And if you found any value in this video, please give me a like and also comment down below. It would definitely help me out in trying to make $1 a day on YouTube. YouTube is definitely a very difficult way to make money. And I know we are all struggling here. A lot of people have bought Alibaba above 150, above 200 like myself. And it's currently trading at 123.80 pre-market. If we take a look at a 6 months chart, the stock was trading above $200, and ever since then it's just been on a downtrend. It even hit a low of 108.7. Let's take a look at some recent news. It says here, Alibaba jumps on the metaverse bandwagon with proposed gaming units. Metaverse has created quite a stir, with tech and cryptocurrency projects making a beeline into this virtual world. Not wanting to be left behind, Alibaba is drawing up the blueprint for its own metaverse. Alibaba has registered a new company named Yuanjing Shengsheng in Beijing to test the gaming potential of the metaverse. Yuanjing has been registered as a company offering software development and services and has $1.6 million in registered capital. A report in a local media outlet citing unnamed Alibaba staff said the unit is likely to focus on the metaverse. Look at these call options here. The IV has gone down tremendously. It's now at 73%, 65%. These were once over 100%. And at that time, it was such a good idea to sell options, sell cash secure puts to receive the premiums. But right now, it is around 73.65, which is still fairly high for Alibaba because it usually is around 40 to 50. I would be very careful if you're buying short term, either call options or even puts, because if the stock is trading sideways, both the calls and the puts will lose value unless you are an option seller. For the 124 calls, they are very expensive. These are just weekly calls. They shouldn't be so much. And we just don't know where the stock is going to go short term. As you can see, the stock has been on a downtrend. If we take a look at these call options here, the open interest, we have 5,000 for the 125 open interest. We have 11,000 open interest. So people are expecting the stock to go to the 130 or above this week. So the put side, we have, so the 120 has 13,000 open interest. And we even have the 100 strike, 14,000. Wow. Yeah, I've stated in the past a couple weeks ago when the stock went below 120 that I was scared, and I am still scared because there is still a lot of negative news surrounding Chinese stocks. This one recently, it says it's game over for U.S. listed Chinese companies. This was published Wednesday, December 15th. So here are the key points. Chinese companies listed on Wall Street will likely to be cut off from the U.S. capital markets in the next 3 years as tensions between Beijing and Washington persist. According to David Lovinger, predicted that by 2024, most Chinese companies listed on U.S. exchanges are no longer going to be listed in the United States. Many of China's top internet companies listed in the U.S. have already undertaken dual listings. Even though Alibaba is trading on the Hong Kong market, it will still get affected if majority of the Chinese stocks are delisted, as we have seen with Didi announcing they're going to get delisted, causing a lot of fear amongst Chinese stocks. That's when the stock plummeted to 108. There's still risk of a major sell-off, which I am concerned about. We're just going to have to see where Alibaba is in the future. That's 1 year, 2 year, 3 years from now. But right now, it's just so much uncertainty, and I would definitely stay away from short-term call options, because I know people are buying these call options almost daily, and the stock has been trading sideways. The best thing to do is sell options to receive that premium. Let me know in the comments down below, are you still buying the dip on this? Are you bullish still? And also, I have a Discord Patreon that I'm trying to grow, so if you guys are interested in sharing ideas, definitely come check it out. I hope to see you there.
Alibaba, because that stock is really getting pummeled in this session. You see it down more than 10%. The company posted a revenue of $31.4 billion in their fiscal second quarter. That was a 29% growth year on year, but EPS declined 38% compared to the same period the last year, and the company cut its revenue guidance, saying it expects growth of 20 to 23%. That is down from the 30% growth forecast in May. And Jared, this is an interesting stock to watch as always, because Alibaba's scale and the size of this company really does act as a bit of a bellwether for what's happening within the Chinese market here. The company attributed the slowdown they saw to a slowdown in consumer spending, as well as increasing competition from rivals. And remember, when you think about Q3, that's when we saw GDP slow down. It grew at 4.9%, but certainly much slower than we anticipated. So this seems to point to what we've seen in the broader Chinese economy. Obviously, Alibaba also a big target of the broader tech crackdown that we've seen in over in China. But it's an interesting contrast when we're talking about Alibaba to its closest rival, JD.com. And I wonder if we can put up the stock chart here, because they did also report their earnings today. A very different story here, at least when you talk about the stock moves. The company reported more than 25% jump in Q3 revenue. We're talking about $33.9 billion. They did report a loss in the quarter, $1.81 a share, but they did talk about annual active customer accounts rising 25%. So, Jared, two big rivals, two big consumer plays or retail plays over in China, those stocks moving in the opposite direction in the session today.
That's right, and let's just check out the technicals here, because, and JD.com, this is a year-to-date chart, and we can see almost back to break even, down only 2% year-to-date is not too bad for one of these Chinese stocks. And I do like the rounded bottom that we're forming right here. It's probably going to take a while to complete, but this is a long base, and I think eventually the stock will find its footing. But Alibaba is a little bit of a different story. This stock is now down 37% year-to-date, and you're talking about all the pressures from the Chinese government. I mean, it was really Alibaba that kicked off the controversy last year when the plug was pulled on that Ant Financial IPO that was supposed to be one of the largest in history.